It is fascinating how the majority of people in crypto don't go the extra step. Most people just look at the website of a project, then maybe look at the price chart, draw some lines on the price chart, and that's about it. Then a buy or sell decision is made. Now in this video, we're going to look at the on-chain data of CookieDAO. So we do go the extra step. We're going to look at who's buying here, who's selling here. Is this small retail? Is this the whales? Let's have a look at how much higher CookieDAO could go from here. Now we're currently at 31 cents. The price has more than doubled in the last week. All of crypto is currently bullish, but CookieDAO definitely stands out. And because of that, it's the second most viewed cryptocurrency on CoinGecko.com. Now, the history of the Cookie token has not been without its dramas. We did see a massive pump and subsequent dump. Can we see at least prior heights to go back to 60 cents, or can we go potentially even beyond that? We are trying to answer this in this video. Now this is just the price chart. Compare this to the market cap chart. For the market cap, we are already very close to the all-time highs. Now why is there that much of a discrepancy between those two charts? The reason is circulating supply. Now with Cookie, it's the same as with many other altcoins. The project starts with a small supply and then the supply grows over time because some tokens get allocated to early investors or to the team or to users of the platform. That means that over the months, it takes more and more capital to keep the price stable. So the demand has to grow faster than the supply. Now here are the tokenomics, or how the supply is growing over time. We started off with only 49 million Cookie tokens. This has now grown to more than 10x 516 million. There will be another 2x in the supply, so we'll go to 1 billion. And the tokens go to all kinds of stakeholders. Advisory and marketing and the team and the staking program, etc. And so it's not really a surprise that CookieDAO tended to underperform Bitcoin in the last months. Yes, we have seen a massive rally in the last few weeks, but since the beginning of the year, CookieDAO underperformed Bitcoin by 54%. Still acceptable given the massive token inflation. The project itself is quite innovative. It tries to combine an attention economy now with AI-driven algorithms. I am not sure though if everything is 100% legitimate, because there are 133,000 followers on Twitter, now known X.com. So compare this number with the number of holders on the Base chain. So there are two versions of the token. The version on Base has 83,000 holders. The version on the Binance Smart Chain has 17,000 holders. So we've got 100k holders across both chains, but there are more followers on Twitter. That does not necessarily make sense. Usually we've got more holders on chain than Twitter followers. So probably something is manipulated. Maybe there are some bots active on social media. Now by the numbers of it, it seems like the Base chain is more important than the Binance Smart Chain, right? There are more holders here. But once we look a bit deeper, actually the Binance Smart Chain has more capital. What we've got over here is the number of retail holders versus whales on the Base chain. So to be counted for the chart on the left, a wallet has to hold at least 3,000 tokens. At the current price of CookieDAO, that's a bit under $1,000 worth of the token. To be counted in the middle, it's 30,000 tokens or $10,000. To be counted on the right, another 10x, so $100,000 worth of the token. So this is the heavy capital. 41 such holders are currently present. Now compare this with the Binance Smart Chain, where there's only 17,000 holders in total. There are much more heavyweights. 89 wallets have at least $100,000 worth of the token. Now what's interesting when we look at those charts, I find it quite surprising that the number of retail investors didn't really grow this year. So that's true for both chains. On the Base chain, we even saw a decline. However, the number of whales is growing massively on both chains. So what is causing this rally is not a broad adoption by many people. It's the heavyweights, it's the smart money, it's the whales that buy in. In general, I trust the purchasing of the whales more than I do retail investors, because the whales tended to make the right calls in the past. Right? Crypto is both a game of luck and skill, and the more the game is played, the more the capital accumulates towards the skilled people. So whenever a wallet with a lot of capital buys into a token, that's a better signal than if a small wallet does this. And so the whales getting heavily into Cookie DAO is probably a good sign. Now we don't just have the chain transactions, right? We also have centralized exchanges. 33 million of trading volume happened in Binance in the last 24 hours. And on the perpetual futures market, we had even 400 million of trading volume. Now that's a lot of leverage to be floating around because perpetual futures are usually just used for short-term trading. The leverage though is not necessarily just in one direction. Most of the time though, the funding rate is positive. So the longs have to pay the shorts in order to get more price exposure, to get even more gains as the price appreciates. The open interest is growing in line with the price. So obviously the price is also getting propped up by that short-term demand. And the liquidations happen in both directions. Again, because the funding rate is quite balanced. So it doesn't seem like there's some kind of a short squeeze going on. It's not like the perpetual futures are betting on falling prices with this rally. What's really going on is that the whales are accumulating more and more of the token despite the tokenomics. It appears as if the smartest of the traders, the people with most capital, they know something that the masses do not yet know. They're probably front running another rally. Maybe there will be some marketing push. Maybe there will be something that then brings more attention to the rest of the market. And maybe then the whales sell. But right now they don't. I don't think Cookie DAO is the best thing to hold over the next 2 or 3 years. But over the next few weeks, potentially, as all of this accumulation is happening, it might make sense to just follow what the winners are doing. Copy trading winners is a winning strategy in itself. Now let's zoom out a little bit and have a look at the macro picture. We actually see an expanding crypto market, money flowing into the market since October of 2023 already. We know this because of this data over here, the stablecoin market cap. It's currently going up. Before October of 2023, it tended to go down. And the way this data is generated by looking at the minting and the redemption of stablecoin. So fundamentally how this works is when you deposit your hard-earned fiat currency to a centralized exchange, then that centralized exchange will send over the fiat currency to a custodian, to a stablecoin issuer. That custodian, so be it USDC, so Circle, or Tether for USDT, that custodian will hold the funds in a dedicated account and then will create tokens. So that's what's happening when this chart is going up. Whenever you're withdrawing your funds, then of course the custodian has to release again the fiat, send it over to you via the centralized exchange, and that's when we go down. And there's a reasonable case to be made that the more money is in a system, the higher the prices should go. Have a look at this. This is Bitcoin since October of 2023. And the largest drawdown we have seen while money was still flowing into the market was 28%. But again, when money is flowing in, those dips tend to get bought up. Now, what are those green circles over here? They appear after a price rally. It's an indication when there's a lot of attention on crypto. So there was a spike in search interest for Bitcoin at the beginning of March of 2024, but also at the middle of November of 2024. So that's what's highlighted with those bubbles. The masses tend to be late. The masses tend to buy after a price rally. And that's a problem, right? Most people enter crypto when prices are high, and then potentially comes at least a short-term correction. And then a lot of those people that got excited about Bitcoin first have to ride through that correction. It can be minor, since currently the market still expands, but it can also be major, of course, as we have seen with prior attention spikes. And so there are two fundamental forces that move the crypto prices. First of all, it's the money in and outflows, but it's also the swapping activity. So once there's capital in the system, people tend to swap in and out of Bitcoin, but also in and out of the altcoins. And whenever we deploy, say, $100 worth of stable coins, the market cap of a crypto asset rises more than that. There is some inherent leverage effect. And that means we can measure how much the market is currently risk on or risk off. What we've got over here is the stablecoin dominance. So it's not the stablecoin market cap, it's the stablecoin dominance. It measures how much of the entire cryptocurrency market cap is currently in stablecoins. When this is very high, the market is risk off. So a lot of the market cap is in stablecoins. When this is very low, the market is very risk on. And in the last 1.5 years, we tended to trade in a range between 5% stablecoin dominance and 9% stablecoin dominance. And surprise, surprise, when the stablecoin dominance is high, it means crypto prices are very low. When the stablecoin dominance is low, crypto prices tend to be high. So interestingly enough, whenever the stablecoin dominance is low and when prices have already gone up, that's when the tourists enter and first get burned. So we want to be counter-cyclical. We want to sell when stablecoin dominance is low. We want to buy when stablecoin dominance is high. And it very much looks like we are currently on the way to seeing more stablecoin deployments. In other words, the current positive rally is probably going to continue. I don't have a crystal ball. It's just the way how I interpret the data. And then the question is, does it make sense to just buy Bitcoin if we expect prices to go up, or should we rather go with the altcoins? Now, some altcoins can do phenomenally. Others tend to underperform. But let's have a look at, for example, Virtual. Virtual went up by almost 3x in the last month. But I think it's better to try to find those altcoins very early. So the real gains had been made in the early days, right? When we look at the all-time chart of Virtual Protocol, those gains are immense. 20,000%. And so the life-changing money is not necessarily just in riding the current wave and buying a broad basket of altcoins. It's trying to find approaches to get into those altcoins much earlier than most. And I think a very good approach is to look at people that tended to buy well-performing assets early in the past. So for example here, right, this is Brian Young. He bought a Virtual Protocol token at 7 cents. And that was on the 21st of March 2024. So that's over here. We subsequently saw a rally of more than 6,000%. And so here's his YouTube channel, right? He's got more than 2 million subscribers. It of course begs the question, is Brian Young just more skilled, or does he have sufficient impact on the prices? Because maybe some of his following is buying into the token as well. I don't know, but it's always valuable to know what those kind of people are doing. The way how we knew about Brian Young buying into the token at that time was not because he announced it that early on his channel. It was because we track his wallets. We've got 5 of Brian Young's wallets. In total, we track almost 600 influencer wallets. So we've got also wallets by Alex Becker. He's got 1.6 million subscribers. We are also tracking the Crypto Banter channel. They've got 1.2 million subscribers. And again, I think it makes sense to be very early with the insiders and with the people that move the market. Now, of course, not every single token that's purchased by an influencer is going to rally. Some tokens are just bought and never announced on the social media, so we don't have the purchases by the following. But if you want to have a chance of being early, if you want to get the 10 or 20x returns, we can't just buy what's already big. Right? We have to buy the things that the smart money is buying as well. And so here are a few examples of trades that our community has made. We discuss the influencer trades. We discuss potential opportunities to bet on rising, but also to bet on falling prices, depending on market conditions. And so, of course, we track our influencer wallets, but there's also a tutorial section on just how to find those influencer wallets. There are various approaches through NFTs, through related transactions, through deposit addresses on centralized exchanges. There are 8 tutorial videos in total. And so then the community is trying to figure out what wallets that we are not yet tracking can we potentially add to our bot. So there's a dedicated wallet research chat. We've just added influencer Chicken Genius. And then every day we get signals when influencers buy and sell. Selling is also important, right? Most people don't publish when they sell. It's very interesting. Some people just buy, publish a video on an asset, and then sell just a few hours afterwards. They're literally pumping and dumping on the audience. It's quite nice to look behind the scenes. And so feel free to check it out. It's down below. It's thebitcoinstrader.com. Currently the price is $125 per month. It went down because search interest in crypto is now rather low. Once we are up again, the price of course will get increased, but not for the people that are already subscribed. So once you sign up for 125, that price is locked in. So here's my recommendation. Don't wait until attention is again at those heights. We are still early. The market is expanding though. Macro is positive, but you don't want to wait until the rally has already happened. Right now, attention is still low. The rally is likely going to continue. As said, there's still money on the sidelines. The stablecoin dominance has room to further fall, which will result in rising altcoin prices. It's just about figuring out what altcoin has most upside. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. The link is down below, thebitcoinstrader.com. There should also be a link directly here on the screen where you click on that link, then it will lead you directly to the page. See you next time. Bye-bye.